Good morning, good afternoon, good evening to all of you, and welcome to this workshop on effective partnership models to mobilize green finance for agri-SME investment. My name is Bettina Prato. I'm the Senior Coordinator of the Smallholder and Agri-SME Finance and Investment Network, otherwise known as SAFIN, which is a partnership of about 50 institutions that work in different parts of the ecosystem for agri-SME finance. It's my pleasure to welcome you today to this event that is co-organized with CGIAR. This event is taking place in the context of the annual partners meeting of the SAFIN network, but it's a full partnership-led event, so fully co-owned with our CGIAR colleagues. In the past couple of years, partners within the SAFIN network have identified as a major learning area for themselves and for the ecosystem, bringing together the agendas of sustainable green climate finance and the agenda of inclusive finance with a specific focus on small and medium enterprises. And in our reflections on this theme over the past months, we have encountered as an important challenge, as also as a critical success factor, the effective design and implementation of partnerships. So this is the theme for the workshop today, for which I will now give the floor to my colleague in the SAFIN team, Michael von Doering, to introduce the agenda and to get us into the proceedings. Thank you.
Thank you, Bettina, and welcome to everyone. Good morning, good afternoon, good evening. Thank you very much for joining this session, which, as Bettina mentioned, is going to focus today on effective partnership models to mobilize green finance for agri-SME investment. As Bettina said, this is a topic that has been on our agenda since the beginning of this year. And this session here is really building on previous sessions that we've organized around the topic of access to green finance for agri-SMEs, with a first session that we co-organized with CABFIN back in May, and a number of webinars that we've run since then, particularly on the topic of partnerships. And so in the spirit of, well, SAFIN, the network, and the fact that this is within our annual plenary event, I would like to emphasize that our wish is really for this to be as much of an exchange, a participatory session where we are able to share ideas and experiences around this topic, and most importantly, partnerships within this topic. And so this leads me to the agenda. I'm sorry, is the agenda on the screen yet? Which you should see any second now.
Can you see that?
I'm not seeing the agenda on the screen right now. So to run you through the agenda, which is essentially going to cover three main topics through 3 sessions. And the first 2 are going to focus on 2 specific types of partnerships that we encounter in the green finance space. And that is really around the providers of green finance, or the sources of green finance, mainly at the global level, with the intermediaries that essentially deploy this type of finance on the ground, and some of the challenges around that, successes, etc. This session will build on a case study that will be presented first, followed by a facilitated or moderated discussion where we invite people to share their questions or their experiences. We'll then take a break, and following that, we'll go into a second similar session, which will build on a case study, but here the focus is going to be on partnerships between the science community and the investor community, again, around agri-SME oriented green finance. Following that, we'll take another break, and then we'll go into three sort of parallel breakout room sessions or brainstorming sessions, where we'll be exploring some specific questions around partnerships that can apply to any type of partnership, really. And so we'll actually, we've asked participants to share their preferences coming in on which of those three sessions they want to be included in, and according to the number of participants that we have, we'll try to honor those. And finally, we're going to have some closing words at the end of this before we close at 5:40 CET. So without further ado, I will pass on the chair to my colleague Godfroy, who is representing CGIAR, with whom we are co-organizing this session. So Godfroy, please.
Thank you very much, Michael and Bettina. It's a real pleasure to be here today for the second day of the SAFIN plenary. So, and from the CGIAR, we would really like to thank SAFIN for the invitation to co-organize today's session. Today, the discussions, as we have said earlier, will focus on effective partnerships to mobilize green finance for agri-SMEs, which is, and this is a topic which is really of high interest to the CGIAR. Mobilizing finance for the sustainable transformation of food system is really at the heart of the new One CGIAR strategy. And as collective targets, we will need by 2030 to equip at least 500 million smallholder farmers with with better capacities and ability to manage climate risk. We will need to lift 3 billion people out of food insecurity and provide them with healthier diets and more affordable diets, and while at the same time reducing emissions from the agriculture sector by at least 1 gigaton. So those challenges are high, and it's clear that this cannot be achieved by a single actor. So this transformation that we want to achieve collectively will require a multitude of players to join hands. And of course, public and private investors will need to invest and finance agri-SMEs and smallholders, but this will not be enough. So many other actors are needed to help identify, design, and implement bankable projects that maximize the impacts and the positive impacts that we want to have across food systems. So, and at the same time, we also need to find innovative approaches to reduce investment risks in food systems, in the agriculture sector, and reduce the transaction costs linked with investing in the sector if we want to be successful and really transform food systems in the coming decade. So this is one of the missions the CGIAR wants to contribute to, and we will present today some concrete examples on how we are envisioning taking our fair share in facilitating the food systems transformation. And joining me today, there will be 3 other colleagues from the CG, Evan Girvetz, who is Climate Action Lead for Africa for the Alliance of Biodiversity and CIAT, which is part of the CGIAR, and he's also Global Program Leader on Finance and Investment for Climate Action. Richard Newman, who is co-leading with me our work on sustainable finance within the CG, and Andrea Novak, who is a researcher from ECRAF and also contribute to the CG work. So without further ado, let me pass the floor to Evan for the first session.
Great, thanks Godefroy, and great to be here today. Welcome everybody. I'm excited for this first session that we have today on connecting global providers of green finance for agriculture to local financial intermediaries, targeting agri-SMEs. And for me, this is really exciting because I think it's one of the big issues we have to deal with is there's great commitments out there in terms of finance at the global level, but how do we get that down to the local level? And I think this session today is looking at some of these issues here. That we know that local providers of financial services are key players in the agri-SME space, but many of them are poorly connected to this global finance that I was just mentioning. And this includes finance from institutional sources like the GEF, the Green Climate Fund, the Adaptation Fund, also from private investors. But we do see new models that are emerging now from different players and linkages for how we can deploy green finance in food and agriculture and reach down to the local scale and do that with greater efficiency and to do it with greater scale and greater depth of impact that we can have at the local scale. So I'm excited that today we're going to have a case study that'll be presented by a couple of colleagues on the Subnational Climate Finance Initiative that I'll introduce here in just a moment. And then we'll have some time for questions, clarifying questions, also some questions directed at the case study panelists that we have. And then we also, as Michael said earlier, really welcome you as the audience, but not just audience, really participants in this. As part of a dialogue here where we can hear from you, your experiences, and also ask questions about how what's presented in this case study might be relevant to the work that you're doing on the ground in the places where you're working. So without further ado here, I'd like to introduce the two panelists that we have today to present the case study on the Subnational Climate Finance Initiative. And first, that's Felicity Spors, who's the head of sustainable finance at the Gold Standard Foundation. She comes with 20 years of international climate finance experience managing programs that range in value from $1 to $750 million to deliver policy and finance innovation, carbon markets, and sustainable development solutions. Felicity has worked extensively on designing new business models, gaining experience while working for the World Bank for 12 years, also for the EIT Climate Kick for 3 years prior to joining Gold Standard. And she's currently leading Gold Standard's work to define new ways to monitor, verify, and measure sustainable impact to support credible and greater scale up of both climate mitigation and adaptation to achieve a just transition to global sustainable development. And also with her is Dorothée Herr, who is the manager for ocean and climate change at the Global Marine and Polar Program at the IUCN, that's the International Union for the Conservation of Nature. She joined the IUCN in 2009 and is now leading IUCN's international policy and private finance engagement on coastal and marine nature-based solutions. Dorothée has authored and co-authored a suite of articles and reports on ocean acidification, blue carbon, as well as coastal marine ecosystem-based adaptation in the context of the UNFCCC, CBD, and other international fora. And Dorothee's also developed with a team of financial experts the Blue Natural Capital Financing Facility and is managing its implementation since 2018. So with that, let me pass it over to you two, and we look forward to hearing about the case study and following up with some questions and discussion.
Great, wonderful. Thank you so much, Evan, for the introduction. And many might wonder, what is this ocean person doing here? But maybe that's part of the story that I'm about to tell you. I'll try to share my screen and have over the PowerPoint. There we go. Does it go on? Wow. Yeah, great. Yeah, I'm here, part of IUCN, and having sort of a broader ecosystem head-on from a nature-based solution side. And also thrilled to do this in tandem with Felicity, who gives you later a bit the lessons learned. We are still a rather nascent effort, but it's been an exciting journey, and we're happy to be able here to share some of that of what the Subnational Climate Finance Initiative, both a fund and a TA, has to offer. I hear others speaking, so there might be a problem with mute. There we go. Wonderful. Thank you so much. Yeah, so I will give you a quick introduction and sort of highlight a few of the points of the SCF. It's an impact-oriented investment structure. It is about blended finance. As I mentioned, there is an investment fund, an equity fund. There is a technical assistance associated with it, and both are supported from the Green Climate Fund. We are also very much sort of looking to integrate, in this case, climate resilient infrastructure with nature-based solution. And that's also often where we then talk about agriculture and the aquaculture sector and how we come to really measurable, certifiable impact. And I'll come back to that in a minute as well. I think on the partnership side that was mentioned greatly in the introduction, we are indeed a very diverse set of actors that come together here, and also for IUCN, certainly being that closely and directly engaged with the private sector is a unique opportunity, and where maybe the sort of the foot in the door from us came a bit through more the ocean coastal side. This is really, as I'll show you in a minute, really an undertaking across ecosystem, across landscape, which we're really thrilled to bring the strength and sort of the experiences from the different entities together. Maybe staying on the impact side and sort of why is this an innovative way of channeling money, of bringing partners together, is that we have the goal to be the first SDG certified fund. And it is where we're working, of course, very closely with our colleagues from the gold standard. And I believe we want impact, and that is wonderful, but we really need to make sure that is real. And I think on that side, yes, we also do need to work on a project by project level, but in order to come to scale that we so urgently need, both for climate, biodiversity, food security, and so forth, we really need to bring it to the next level. And here we are proud to really say that we're aiming to have this one certified at the fund level. As many that are in this space, I'm sure I don't have to tell how nevertheless difficult it is to sometimes get some of these projects sort of off the ground, bring private sector capital into the discussion. So how can we work with some more concessional finance, in our case, the Green Climate Fund, to really help leverage the more sort of, capital investment. And then I think the third part is really about the technical assistance. And that is also where IUCN comes in and helping support the broader team about working closely with the project developers, helping them according a bit to their needs. Not one project is like the other, and so diversifying a bit the TA, the support we can give those project developers. And I think that's really also an exciting part, because to some degree we all wish these projects were a bit more advanced. Some are, many aren't. So how can we help those that have huge opportunities, but that still needs a bit of grant support, where we can come in and help them move along the development chain. Here, a quick overview, where are we active? We have the endorsement via the GCF of 42 countries, a bit around the globe, with some heavier representation in Latin America, as well as the African continent. Broadly speaking, we do aim to, as I said, to act on a subnational level with the local authorities. I think that's also really an innovative part that we are trying to address here, and have these appropriate counterparts in the countries. From a sort of sector diversification, it includes the climate resilient infrastructure and energy, waste, and others, but also the aquaculture side, where again, from an IUCN point of view, we are very thrilled to see how we can bring in the NBS discussion, the standard that we have launched, and again, in collaboration with our colleagues from Gold Standard, how we move those together into a certifiable project and then fund level effort. This gives you quickly an overview of what we believe is indeed a unique consortium with the Climate Fund, Green Climate Fund as the anchor investor. We have Pegasus Capital Advisors as the fund manager. As I mentioned, IUCN managing the technical assistant, with our partners, Gold Standard on the certification side, but also Regions of Climate Action, R20, that really brings in the infrastructure subnational component into these discussions, and having BNP Paribas as sort of a fund ambassador joining our journey along the road. This just very briefly, a quick insight a bit more specifically into the technical assistant part, and also to give you an idea of what type of project range or deal sizes we are looking at. It is in the range between 5 and 75 million, and would be interesting later in the discussion to see how that finds its footing in the sort of social medium enterprise sort of discussion here. We have sort of 3 big components. One is the project development part, as I mentioned, where we help through technical support, and then working very closely already with the equity side on what projects could ultimately be picked up from the equity side. We have a capacity building element, because we see there is a need from the project development side, but also on the local authorities, as well as other financial players in the national or regional context, to work jointly with them along this journey that is set up for quite a few years to come. And then again, the impact metrics and indicators, working around new tools, also ensuring, and we haven't talked about yet vis-a-vis the risk side, to really apply a strong ESMS effort across the board. And I will finish with this again, because this is a highlight how we envision sort of the Subnational Climate Fund coming together on a fund level certification. And I think that's also for me the good segue over to Felicity, who will give us a bit, sorry, we are together here in one room, so that's why we did look at each other. And we have the consortium actually sitting downstairs, working on some of those topics, how we implement the SCF fund. So Felicity, over to you.
Thanks, Dorothée. So this is just, as Dorothée indicated, I think it's of quite a lot of interest to people who are used to certifying impact on a project by project basis. The questions are, how do you aggregate up? This is a very simple expectation of it. Of course, we are unpacking questions of weighting, attribution and additionality, and the outputs of that will be out next year. But in a simple term, we look at the contributions of each individual project. So the diagram shows a wind farm, it shows a waste to energy plant, and it shows a municipal waste water plant, so not agriculture, but we will add up those contributions to a whole at the Subnational Climate Fund level. So my part of this is to kind of share with you, I think, some of the key learnings. So there's some things that when we look back, we go, we did that quite well. Clearly, there's some things we recognize, oh, wish we'd started doing that earlier. And there are also some things that maybe still need to change to help us deliver on the promise that we have set out to do. And I think that might be interesting for the discussion today, or at least I hope it is. So one thing is on the project identification and development side. The fund brings in equity and technical assistance. And what we found is that gains a lot of interest from governments, as well as a variety of commercial enterprises, including SMEs. It's not a debt and equity. I mean, it's so really the equity is very, very attractive. But what we have noticed at the very early point of design is that projects often are not designed to deliver maximum sustainable development impact. This leads me to my second point. By engaging with Gold Standard and IUCN's nature-based solutions standard, we can, at the very, very start of a discussion about investment, bring in, because of our consortium, a discussion about impact. And of course, that is game critical for a kind of indirect capacity learning where the incentive is ultimately clear. Either you bring in the impact or you don't get the investment. And as a result of this work, you will see coming out of the Subnational Climate Fund a series of tools, watch your inbox, to help, for example, on the go, no-go criteria. What questions do you need to ask to ensure you're delivering not just on climate adaptation, but also considering biodiversity and water and gender and welfare? And that is the unique element of Gold Standard, which is a multiple sustainable development goal standard. It places climate at the heart, but requires a minimum of at least 2 other sustainable development goal impacts. We have learned that when you design these projects, you need to budget for engagement with the designated national authorities. And you need to manage very clearly expectations. This is quite a timely thing. Looking back, we did not foresee quite how much time it would take, but we are addressing that and really recognize the value of doing that well. So I think I'll move on. I can give examples of these things later if people are particularly interested, but for the interest of time, I'm doing headlines. So I'm encourage you to put questions as I go through these slides in the chat. I'd love to elaborate more, but I'll keep going. The second thing I think is interesting is learning about investors' needs. I don't know if you're familiar, but Convergence is a platform that tracks and monitors blended finance vehicles, and the Subnational Climate Finance Vehicle, according to their research, is the second largest blended finance vehicle on the market. The average scale is 60 million. And so as a 750 million equity investment arm with a probably about sort of 25 million TA arm, it is the second biggest on the market right now. And I think what we've learned is that the structures, due to the multiple relationships, can create complexity, but they also, which can be a bit of a challenge for the private investors, and particularly for the investors into the fund. So not only do you need to think about the blended finance fund and the people driving sustainable development impact through a consortium, it's also really important to start talking with investors at the point of design, to engage with them, as you're designing that thing. So looking back, I think that is something that maybe in hindsight, we'd have done more of in the process of designing this. Clearly, talking common sense, impact investors want liquidity. What do I mean? They want to get in and they want to get out. So having the ability in your structure to enable one investor to sell on their contribution, as it were, to another investor would be good. We lock people in for 12 years of the SDF, which has the advantage we have a guarantee of patient capital, but there are other clever ways of creating that lock-in without reducing liquidity, which we didn't think about. I see USAID is on the call, so here, I think I really appreciate the work that's been done by USAID at the moment in supporting blended finance and developing credit guarantees. This is something that I think would also have been to our advantage had we designed it. We are targeting 5 to 75 million investments. That is, in the world of finance, mini. Most investors want a minimum of 100 million, right? So, and we're trying to get them to the 5, right? We don't even want to be, we're trying to push them down. But this is also something that people look at us with quite big concern. And I'll come back to that. There's some reasons why. It's not just because they want an easy life, some of them do, but it's also because there are regulatory barriers to them doing otherwise. Another thing we noticed is that public and philanthropic investors could do more, in our view, in actually taking first risk loss, or looking at how to take the risk of an investment, whether that be because it's in a low income country, or whether that's due to complexity in terms of aggregation. And so I think there's a lot of things that we're learning in this, which we would like to share, but then where do we share it? How do we, it's great to be on this, but, how do people who are in the existing 160 blended finance vehicles in the world, we need to do more sharing. Convergence is a good starting point as a platform, but I think we need to share not just amongst ourselves, but also with philanthropists and other people who are curious about that. And I think there is a need for that space. Next. We are learning a lot about investment culture. Although I've got a lot of history in sustainable finance, I did come from the World Bank and sort of a public project loan sort of background, so less the equity fund manager experience in the private sector. And I think you have to just be aware that not only are the kind of projects that we're asking investors to invest in to drive sustainable development complicated, their own institutions are becoming less capable of dealing with active live projects. 70% of the world's asset management, assets under management are managed by intelligent algorithms that dictate the buying and selling of shares. So that's 70%. which has a direct impact on the quality of fund management in terms of a skill of active projects. And that's active projects in safe spaces, let alone if you then add the complexities of low-income countries and aggregated business models. So I think there's a need actually to address that capacity need. Note to international development agencies in the room, can we not talk about how to develop that capacity, building off the experiences of multiple blended finance vehicles who are reaching out to bring money here. Another point is around communication and commitment statements. So how you measure impact data. So standardization, there's a lot of noise. There's environmental, social and government disclosure requirements. There's new requirements on materiality. There's science-based target alignment with the Paris Agreement. We have the new requirements coming out about biodiversity. What about water? Well, I worry about gender. How do we bring this together in a way where it's not multiple KPIs and metrics? There is work being done in this space by the GIN and by other, the OECD, and I'm sure lots of us are working to harmonize. But I think standards, to my community, we really need to set the pace and try to align and ensure that we are harmonizing metrics and reducing the amount of measurement options in order to get clarity about what is gold, what is the best. And if we can define that, we can get a race to the top. Because if you can define what is doable and what is the best practice in delivering on impacts, then I think you actually start creating a race to the top. I've also put here that, some aspects about remuneration. So there's some serious issues in the institutions about remuneration, which could be addressed. And I won't go into that. These slides are made to be read. So I hope you excuse the many words. Next slide, please, Dorothée. So what do we learn about investment regulations? So existing, as always, we're doing cutting edge stuff. You're interested in the audience because you want to support small, medium enterprises in agriculture, but there are fiduciary regulations that are reducing the ability of the private sector to invest in the projects that you're presenting. And that's not always for lack of want. I think it's a lot to do on the risk return, that if you are, at least in Europe, you have to hold a lot of capital back on your bank account if you invest in a high risk project. Investment in agriculture and low income countries is high risk. This means that you have to hold a lot of money back to invest. So I invest €5 here, I have to keep €10 back in my bank account and can't use it for other investments. In addition, you have a much higher due diligence cost. And these requirements and these are basically inhibiting the fund managers who want to do something good. And so I think we have a responsibility to help them help us. So we'll come to that in my recommendations next. So the recommendations are what I would like to see, and what maybe some of us can get together at the COP to discuss. If you are interested in trying to create some noise about these as well, like I am, is we need to look about how to get development capital into more catalytic, a different type of design of instrument. We see in the market primarily equity and loans, and the financial toolbox for those who are in finance is way bigger than equity and loans, and bonds. And bonds at the moment that are called green are not catalytic. They're not catalytic because they don't give you an additional value for taking a risk. So the money in bonds, it's very difficult to get the investments under bonds to really go where it's like high risk. It's hard. And if we're going to get the projects like we want to see in agriculture, we need some different types of structuring. The next recommendation is we really need to standardize things. We need to standardize what we mean by blended finance, so we talk the same language. We need to standardize how we report and measure on impact. What is credible impact? Why? We need to learn from each other. No one's going to get this all right. So we need to share our experiences in order to do the advocacy, to change the regulations, to help the financial community get to where we need them to go, your projects in agriculture. I would like to see efforts made across existing instruments to aggregate the pipeline. One of the problems we have is that things that fall kind of below 10 million, it's really, really hard to get the team in SCF to even, really take it seriously. It's a really hard fight on our side with IUCN and Gold Standard pushing it. But if we could get multiple farming projects, so let's think about mangroves supporting fishing as a form of aquaculture, can we not get communities to work together? And do they need a middle agent? That's the question. In order to get the scale that we need, could we package a whole country with all its farming needs as an entire portfolio? Could we look at the need of the way we aggregate the pipeline is key to getting the finance we need to drive the scale of activities we need to meet the Paris and climate challenge. Based on that, I do think we need a place where we can come and speak and talk about it frankly. So a common platform. I won't go into it. I think it's self-explanatory, hopefully, from what I'm saying, but I've got lots of ideas on that. And I think this is a very challenging one for anybody who's a development bank. But can I just be provocative, because we're in a nice familiar atmosphere, to say, I'm not sure that public money is doing enough to leverage private capital. I'm not sure that the money's going to where it wouldn't have gone anyway. So can we set targets? Is that really hard to do, that you become like the private side a bit and you have to set mobilization targets? And I'd love to learn if that's totally impossible, if other people are thinking about that. And then finally, to address this regulation issue, how do we make regulations change quickly? Not an easy ask, but we have, so many years to go before we really have a catastrophic climate. We're looking at 2.7 degrees, according to the IPCC report, based on the commitments made by governments worldwide ahead of the COP. And so my recommendation, or our recommendation, would be, why don't we consider doing a prototype example, a sandbox, what it called, it comes from innovation, where we waive certain regulations for certain activities within a closed space. You've seen it like with the application on robots, for example. You allow robots to deliver you posts, but everybody monitors it carefully to make sure it doesn't contaminate you understand safety requirements and rules. And we can do that for regulations. So why don't we try waiving some of these regulations on financial investors that's making it difficult for them to invest in sustainable development where it can drive the most impact, and see what does that mean about how to ensure that the reasons they were put in place to protect our money, basically, can still be addressed, because they were put in there for a good reason. So we just need to find another way to address those concerns. And I've done a lot of talking, so that's it from but I'm really curious to hear your questions. So I do hope you'll fire Dorothée and me with some interesting feedback on what we've presented just now. Thank you.
Great, thank you, Felicity. Thank you, Dorothée. Fantastic. I think really exciting what you guys are presenting and putting out here for discussion today. And as a first step in our session and our interaction with the audience, I'd like to open up to see if there's just some clarifying questions. We'll get into some more kind of content issues and deeper discussions here we'd like in the coming minutes. But just first, to see if anybody has clarifying questions about the presentation, you can put them in the chat. You can raise your hand, and I can call on you. Yes, I see a hand here. Is it Arindams? Please, welcome.
Thanks. Thanks. I'm Arindams from Rabobank, based in New Delhi, and I have a question for Felicity. A wonderful presentation. Now, we are running 14 blended finance transactions in the ag space. Most of them have green end use. Now, one of the things I strongly believe in, and for all the transactions, we have had mainstream financial institutions in India front the transactions. Now, how do you look at that? Because I'm looking at replicability, I'm looking at scale up, I'm looking at local currency funding. Otherwise, these structures are so unique that at times the cost is simply too much. And secondly is it's impossible to scale them up unless you have ownership at the local country level who builds up relationship with SMEs or cooperatives. Thanks.
Evan, how are we doing the questions? Do I just respond, or do we collect some?
Let's see, we've got one in the chat, so let me put that one out. And I think those are the only ones we have right now, and then you could respond to both. So the one in the chat is from Bettina. Can you elaborate a bit on the specific role of the sub-regional institutions in the SCF, the Subnational Climate Finance Partnership? Are local financial intermediaries, including local banks, for instance, directly involved in the R20, or are they involved in the quote partnership in another way? So I think you can take those two questions and we'll see if any more come in the meantime.
Okay, I have a different view, Arindam. I think the traditional way of doing investment requires that you always have the local, I mean, it's always good to have a local development financial institution involved, but I don't think it's a must. I think it's a weakness of our approach that we didn't kind of build them in more. I think there's work that we could do there to build in local financial institutions, but it can work without. Why? We're pivoting to a different audience. I didn't emphasize enough that originally we were targeting primarily on the fundraising impact, traditional impact investors. So some philanthropes and some sort of financial entities from Finland who give you, I don't know, 100 million or something like this. But we found that we're pivoting towards corporates more. And that's because they are also very, very under pressure to deliver on their SDG corporate commitments. And I'm very, very interested in certification because for them, the credibility aspect is critical. And so I think when you're talking to corporates, it comes to this different kind of alliances. As we play with something new, we're actually targeting slightly different audience. And so if you look at that audience, you might not need the DFI. And I think that's really interesting. So we really are learning as we're going. And I'd love to talk to you more about what you're doing at Rabobank, because I've seen some of your models and how you're getting value out of carbon. But I guess the question to you would be, are you also getting value out of the additional co-benefits, which we can't yet monetize? Are you getting value out of biodiversity? Are you getting value, are you monetizing it in your business models? Are you still building business models about the only thing we can really monetize right now, which is the carbon? And there's a danger in that, but we can come back to that later. But I'd be curious from Rabobank what you're doing.
Sure.
Great, I'm happy to go for the other one, and Felicity will support me as she's more in the in-depth of the pipeline development than I am. But certainly, I mean, we have sort of the core project partners, if you like, running the implementation, but there is a broader ecosystem of partners that we need on the ground to really making this happen. And specifically from the capacity building point of view, we have the local authorities as well as sort of the financial intermediaries, the representatives, to sort of join us into the discussion, to learn from them, but also equally when it comes, for example, again, the NBS side, that is still a lot of a question mark for many, what it actually means in practice. So how can we bring that to the various audiences? So we are in the sort of the final stages of building a broader capacity program. But I think it also, given that we have 42 countries, we see a bit of sort of different projects coming our way that have different type of engagement. So it's hard to still sort of make that a generality, if you like, but at this stage, we're still able to engage with them and with those that we hope to sort of identify and then have the decision made on, to really accompany them throughout the project development cycle. And I think, again, looking at my own experience a bit more on even a smaller scale and on the marine side, it is really sort of, I always call it a hand-holding exercise, not in any sort of negative way, but it's a partnership and you have to hold hands together to get through this. And whatever questions there might be on the road from a sort of TA development, bringing in the different financial opportunities, etc., along the way with the project developers. And again, for IUCN as well, on one hand, reducing any potential negative risks of those investments, but also really ensuring that we have the impacts on the other side.
I just responded again because I'm not sure I answered your question. So you put a question in the chat, Dr. Prasoon Kumar Das from Rabobank. We are not engaging directly with central banks. We are going global, and we have letters of intent from 42 countries' governments. So indirectly, I guess, the government has said that they support this activity. So that's how we did it. So I don't think you always have to engage with the central bank.
Also bring in a couple more questions from the chat, and also I welcome anybody to raise their hand. This was going to be clarifying questions. Like we're getting into some of the content here, but I think it's okay. And then we can proceed with the discussion now with these kind of questions. So from Marie Even, very interesting presentations. I saw a lot of attention on technical assistance to help design quality, bankable proposal. But what about for implementation delivery? Which needs and collaborations, co-financing can you imagine with ag extension implementation service to ensure quality implementation as well? And I'll pass that to both of you.
So I think at the TA, it's very much like getting it bankable and doing the feasibility studies and to design in for effective operations. So once the project is running, what happens when it doesn't deliver? I mean, it is another way of putting the question, right? So basically you get a corrective action. And so then it is down to the project developers to deliver. So they sign up to a commitment to deliver impacts, then you need to deliver. It doesn't mean it's game over. It just means that you have to take that responsibility very, very seriously. So the purpose is to set you up at the beginning in line with, like, and it's a very professional screening. So the feasibility and the feedback you get from the financial sector is extraordinarily thorough. They can spend up to 1 million of their own money to make sure that they understand your business model, that they really believe you've got the project operation under control, and they will feed all that information back into what you're offering them at the due diligence feasibility stage. And where there are gaps, or where, for example, Dorothée and I and our teams will look at your project and say, for example, I mean, just to give you an example, we're looking at a project in, actually, I don't think I can tell you where. We're looking at a project which is on an island, which is considering an eco-tourist place, let's say. I think I can describe it like that, right, Dorothée? That's okay. People, we have said that's a really nice project and you're doing great things with renewable energy and resource, but you need to support the island, all the people on the island. No point having just one, eco lodge. What about the people? Don't they get benefit from renewable energy? How can you support the gender, the employment? What are you going to do to change the way this is running on the island? So we helped the project developer, who came with a quite simple investment asset, to think broader, and that is supported by the equity side. And we'd like to flag that the private money is looking for that bigger impact, and we push them to the design. Now, how do you manage that properly? With alliances. I mean, this is all about partnership. So that kind of the project developer goes, oh, who are these people, these NGOs? What is this? This is not a project investment discussion. Why have I got to redesign my project? But then they understand how important it is to equity, and then they take it seriously, and then you engage with the government, and then you get additional money, and you can build and design the project properly so it can deliver. But in response to your question, the responsibility for ensuring operation lies with the project developer, at least in our project. And I think it's an interesting question and something that we have to own and evaluate. Is that sufficient for delivering on the kind of projects we're talking about? We're working with people who can't, in many cases, can't read and write. So I hear you, and the jury's out, I would say.
Great. Another question, and this is maybe even a bit clarifying from the presentation. Felicity, you mentioned green bonds, and there's a lot of hype about it. You didn't seem so keen on them, and so just want to see kind of what are some of the reasons for that?
Yeah, I have a pet hate. It's called green bonds. I'm going to speak a bit of finance language, excuse me, but a green bond is a vanilla bond. A vanilla bond is a boring form of ice cream, right? Like if you can get vanilla or chocolate, you want chocolate, right? But chocolate requires you put chocolate in vanilla, so it's more than. So a green bond today is a vanilla bond. A vanilla bond is basically where exactly the same as any other bond out there. It's just that you say just these types of projects which are green according to, oh, renewable energy is green, isn't it? Let's do that. Oh, let's just do it in Europe, and now I've got a green bond. It is green bond money, when you look at the size of the market, which is WINI, it's like 2.3% of all kind of debt raised, the green bond of bonds. Is it really driving something that's additional? Would it have happened anyway? Like, renewable energy is profitable. Like, don't tell me about a renewable energy bond. It's just like not interesting. Tell me about an regenerative agriculture project, which has got something like 30,000 micro farm holders and is across Burkina Faso, Nigeria, and the Yemen, you know, and then you're talking to me because that has impact. So my problem with bonds is it's vanilla, not chocolate. So there's nothing extra in it. There's no premium for the risk we take to drive complicated projects. And so I don't know what to call them, but vanilla is not yummy. I want chocolate. I hope that's clear.
All right, I might even say an ice cream sundae where you add a lot of extra things on there. And I know you did mention some of the complexities that come out in these kind of models in the partnerships, and then how you implement those. Maybe just stepping back for a moment for both of you, Felicity and Dorothée, reflecting on the initiative that you have here, thinking about others that are out there and kind of what they're doing, how this might translate to them in some ways. You mentioned a lot of lessons learned, and I think we can think about those as challenges. But if you could just highlight maybe what you see are a few of the key challenges that you encountered in implementing this, in the partnerships, in the structure of how this is put together, and you know what you think others would expect if they're going to try to do this kind of thing. You know, what are some of those few key challenges? And then maybe the audience too, if you want to start thinking as they present on these, you know, how might we address these? You know, how might you address these in where you work? But a few of those key challenges that might translate to others that are here on the call.
Great, I'll give it a go. Well, I have been. Well, let's start with GCF, which some of you I'm sure have encountered that process, and I think it's a very interesting and steep learning curve, but I'm sure in sort of that process and also how projects are set up, managed, etc. There's certainly lessons learned and how to streamline efforts. But the really fun part was to work with equity together. It was sort of, it was a new partner that from an IUCN point of view was, as I said before, an opportunity and speaking the same language. And it's even, I'm coming from a conservation background. I've been working on the finance side for a few years. And every time I think I understood the finance side, I realize I haven't fully. So it remains a learning curve. It's building the bridges and understanding each other. What are the needs? What are the risks? And how do we build that also then in a structure like the GCF, where the different organizations sort of get what they need, what they want to push. And of course, for us, from, as I said, from an IUCN point of view, minimizing the risk as well as sort of increasing the positive impact. How do we bring that together with sort of the return on investment? But I think what I'm excited about is we really get to the bottom of it, because to some degree, there's this lot of, announcement and ideas out there. And here we are in the weeds of it. And we are, learning by doing to some degree. We bring our collective expertise together. And I think, again, whether it's NBS, whether it's the sort of more the infrastructure side. So I think the sort of learning to speak to each other about the risks and the needs, I think that is the biggest learning curve, where whether in the structure of SCF, but in general between sort of these communities is an important one.
I mean, you mentioned what are some of the barriers. I think some of, the assumptions. So while the strategy CEO of the fund manager is very keen on delivering on impact, the pressures on his team to deliver a high internal rate of return, we're still raising equity, right? So is really high. So we are all at one of the barriers is this constant tension between tolerating a less exciting project with less exciting to me because I'm interested in high impact, in order to get a balanced internal rate of return versus, sustainable development impact. And then also in this, when we're saying nature-based solutions, we're looking for biodiversity and climate. We're pushing the envelope on that. And when you introduce biodiversity, then you're asking for an agriculture project to start really integrating then the sustainable forestry, which isn't in their business plan. So a barrier is the complexity of we hold the tension in the consortium that actually then is passed out to real work for project developers, which can delay financial flows, which for the investors investing in the fund is unusual. And so addressing expectations, assumptions, common language is critical. And that's why the alliances you make in the consortium, because we need to understand each other's worlds in order to be empathetic to their pressures, in order to communicate in a timely way. We all need to be a bit patient with each other. And I guess that is so not my middle name. I'm called Felicity, but not Patience, for a very good reason. And so, you know, I'm learning patience, and it's not my favorite thing to learn. So that's one of the things at a personal level. And the other thing is, I think this looking at how that tension on the need for profit versus how do we deliver on impact, how we push that. And one of the critical learnings is if you don't get the strategy right, you have failed. You have to get them to commit, and then you hold them to that commitment over and over again at the go, no go, over and over again. So we have a design where at every investment decision, we force them to look at their original strategy indirectly. So we're always aligning with what they want, right? Otherwise, we're just the annoying NGOs again.
That's why I think we see a huge amount of opportunity, and we all know we're here because of that. But getting this alignment between the partnerships, I think is key, is what I'm hearing from you for one, and then somewhat speaking the same language and understanding what each other are saying, or understanding from the other side that kind of empathy that you were talking about. Some patience there. I think I like that bit also that you were mentioning, that it takes some of that. I mean, enthusiasm, I think, for one, and everyone needs to have that, but also some patience as we work with each other there, and then getting the expectations you were mentioning and assumptions align there in these kind of alliances. Great, thanks for that. Jonathan Agwe, I see you have your hand up. Please, welcome, come on in and ask a question.
Thank you very much, Evan. Greetings to all of you from Abidjan, Ivory Coast. I love a statement that Felicity just made, something about high impact and sustainable returns on investment. I am with IFAD, and this green finance, climate finance, is really a new, product for which we are realizing, especially within the smallholder segment, that there is no demand, in which case we have to contribute to building the demand. So when you are agreeing that we will have to contribute to build the demand, but already you put up front this conditionality of sustainable returns, I start thinking whether you will not be pushed to actually selecting only those smallholder activities that actually demonstrate, the potential to give you back your, sustainable returns that you're expecting. Why am I highlighting this? Because IFAD is working with lots and lots of smallholders who are in the food production area. I see the example of cocoa is good. I mean, cocoa is one of those low-hanging fruits. You go there, you get it, But when it comes to a majority of the smallholders who need this climate finance, they're doing food production with a little bit of excess for marketing. So in terms of your growing the market, how are you going to approach these ones? Or will you even go there for now? Thank you.
We really want to go there, so let's talk. I'm very interested in cocoa as well. I think there's a lot to be done, and the reason we go there is that the investors are not always traditional investors. I mentioned it a bit, but corporates are interested in getting a sustainable supply chain, which means the supermarkets who are buying the cocoa, or the middle agents, the delivery, the wholesale buyers, right? There's increasing pressure on the corporate world in a way that's not on the traditional investor. I think the investors will get there. That the investors want to get there. Ironically, they want that they are held back by the regulations I mentioned in my presentation. It's very hard it's very, very expensive for them to invest in a sustainable cocoa plantation right now, because there's a lot of reasons why it's hard for them. I think corporates could do better. And then the question is, how do you aggregate it? The other side of the problem is little cocoa farmers are really great, but they often just buy through a middleman, and they don't see all the people who they're buying from. So how do we address that? And I think the way you define a portfolio, the way you define your project needs to be looking at the sourcing space, like all the cocoa that supplies to the wholesale retailer who sells to Europe. That whole area of farmers have to be doing sustainable practice. We can invest in that. We can actually get corporate investment for that in a different fund stream. That wouldn't be under Subnational Climate Finance Direct, although we could prototype elements of that under Subnational Climate Fund. But I think that's something that I think would make a lot of sense for the agriculture food sector. We're also interested in adaptation in this fund. So where there is an opportunity to have an investment in food production, and we can show, that how that's contributing to adaptation and regenerative agriculture. So we meet IUCN's nature-based standard requirements about making sure that we're being mindful of biodiversity, which includes water. Then I think, we can help design cocoa production. I think there was a question earlier about how we're engaging with smaller agriculture businesses. That's a little bit the direction of travel under this fund. But I think there's a bigger, more exciting fund potential, Rabobank out there. Let's talk. I want to design a fund, responsibility high. We had this chat already, but I'm really interested in looking at sourcing areas for the supply chain of corporates and really focusing on corporates and philanthropists to invest. I think it's actually quite an easy win. The corporates want sustainable development. We can measure it and make sure it's credible, and we can really drive impact at the lower level when we get that money running to support the farmers you're supporting in it with IFAD. So there's a lot of potential. I don't see that. Yeah, I think we can overcome the issue that you're saying. So you can get into, you can manage. Have you seen the IADB approach, the International American Development IADB Bank? Yes. Is they have their approach is very much you take some projects which aren't so exciting on impact, that kind of give you a little bit of stability about internal rate of return, and you balance that with other projects which have high impact. And I think we're learning to do it a different way, where we've set goals for impact for the fund at the start. We're not just balancing the IIR. The IIR is one thing we value in this fund, but we also value the impact. And we value it so much, we're going to measure it and make sure that you're delivering on that. So every investor can make a claim. We made a contribution to sustainable development, and it is real. It's measured every year. And that's what the value of the certification is.
I was going to have a little quick follow-up on the measuring the value of impact. And again, with a focus on cocoa. And I'm going to say something that might be politically sensitive, but please see if you can help me out. I am based in one of the two countries which produce, I think, 70% or more of the world's cocoa. This is Ivory Coast. And Ghana is just next door. And there has been a lot of talking recently, even from higher quarters like the president of Ghana, talking about in situ value addition to cocoa. And that brings impact, to the producing economy. So in the design of your interventions, are you looking more into sponsoring activities post-harvest that are going to actually generate revenue within the economy? What am I saying? Rather than, invest in activities that will support export of raw materials, you invest in activities that will, create more impact by encouraging local value addition. And I'm thinking this should be part of your technical assistance package and capacity development. Right? Are you thinking along those lines? Thank you.
Yes, we are. So we're interested in investing any project that delivers sustainable development impacts and that can support agriculture and aquaculture, delivering the best solution, which we believe to be a nature-based solution to the extent possible. It won't work for every company, every SME. But to the extent possible, that's the lens we apply. So if the upstream activities around cocoa could be designed in that way, then yes, we are interested in investing in them. We don't mind if it's the plant, the farmers planting the cocoa and collecting them, or whether it's the side industries outside, whether it's a waste optimization factory that's utilizing the waste from the cocoa plant that's exporting to the supermarkets in Europe. I mean, we don't mind. We want a project that delivers on impact. So as long as the impact is measurable, credible, then it's interesting. Yeah.
Great, picking up on some more of the questions that are in the chat here. So one of them is it possible to get examples of the deals being structured and how they bring about systemic change and thus climate impact? And maybe a kind of follow-on to this are, can you give some tangible examples? And I understand that the fund's just getting started, so you may only be able in theory or even drawing on other experiences that you have.
Just to be really clear, that we have tangible investments, but the deals aren't closed and we're under confidentiality. So you have to give us a couple, it's just you're 2 weeks too early.
so maybe you can't even answer the question, but let me just see is kind of, can you give examples of kind of specific intermediaries that you're working with, how these partnerships work? I mean, it doesn't need to be a specific company, but maybe more kind of how, and maybe kind of unpack that a little bit more, especially since this session is focused on kind of how we get the money down to the intermediaries that are there. So yeah, a bit about how it's structured. That was the question. I was following up with how these intermediaries are being kind of brought in through partnerships and supporting the agri-SMEs on the ground to get the impact ultimately.
We're investing into, ideally, the way so we have some investments that go into organizations that are quite big already, like medium-sized companies that have a product, whether that's timber or whether that's cocoa or whether that's fish. And they're looking to scale. So one group of the activities are those organizations, I would say, are more medium than small enterprises who already have done that aggregation and have a track record, and they're scaling it. So they're expanding it to maybe another country or throughout a country. That's one. And the other kind is directly to a small enterprise that is really driving something impactful. So there's nothing about going directly to an enterprise. So for example, in a waste optimization measure, which is collecting the residues of can I say what it is? Residues of a product, a agricultural product that can be used for creating energy, that this is just as a small thing that is highly impactful, and it's at a scale where they can absorb 5 million the ticket, but it's small. And we felt that it was very, very impactful because it's also addressing some issues around gender. It's addressing issues about waste optimization. It's creating work, and it's it is this local thing, which I've forgotten your name. Sorry, you just spoke just now talking about cocoa. Sorry.
I think was that.
From IFAD just now.
Jonathan.
Sorry, Jonathan. Yes.
Good. And maybe following up on that a bit, you mentioned corporates before, and kind of the role that they could maybe play in being an intermediary to get money, to be engaging with farmers on the ground through them, and sort of what are the opportunities that you see there, and is this also something you guys are looking at or you see as an opportunity kind of in the future?
We had some weird noise on our line here. I don't know why, but could you just repeat the question?
Okay, I was just asking about the role of, you were mentioning corporates earlier and kind of the opportunities of them as being an intermediary here that you can be working with. And I think you didn't sound like you mentioned them so much right here in this example, but kind of what the opportunity is for the future. I think you mentioned it in your remarks earlier. And that's the follow-up.
Yeah, sorry. So the corporates are, I just think traditionally, when you think about who puts money into a fund, like you can define a blended finance vehicle, whichever way you like, right? But who's putting the money in? Is that like questions about, is it a central bank? Is it a development agency? Blah, blah, blah. What we find is that traditional investors, for the reasons in the slides that you can all read later, are having a hard time investing in small projects, as you are all experiencing, right? So even with big concessional finance from like the Green Climate Fund, and we have got like a big chunk, they've given us 150 million concessional finance in the equity, and they've given us 18 million on the TA. So this is like for them a first that they've given on both equity and TA. It's their first project they've done that. And I think that that what we see is that because of those limitations for traditional investors in funds, there's still some that do it, that, you know, they are prepared to do that, but primarily for experimental reasons, that we're pivoting towards raising money from corporates, and that's because they have a different need. And then the question is, are the funds that we're looking at that are traditionally targeting that audience actually designed right to get the most out of the corporates' money? Because actually what corporates are interested in is generally supply chains. They have a different narrative they want to tell, and that opens up a space for how we design or aggregate portfolios. And I think that is a really, really, really exciting space where they're interested in not just climate, they're interested in sustainable development. That it doesn't have to be an ESG disclosure. It's not a risk mitigation approach, which is finance's history, which is let's just avoid the risk of something go wrong. Corporates want to say, we want to prove we're making a genuine contribution to these things. That is the language of impact. You know, impact means a change in status quo. People forget that. That's why I say it now. they forget. And so I think it's a very, very exciting evolution. And once you get corporates in, then you go back to the investors, because that again will move the investment community when they see, you know, I think we're at the sort of, you know, we've got this little bit of a momentum. And remember, blended finance is weeny, you know, for finance people. You know, when I was at the bank, we were talking, you know, minimum 500 million, you know, so you want billions, right? Scale is most of them are 60 million. So they're like niche experiment projects for most investors at the moment, like traditional investors.
Yeah. And just to follow up, I saw a comment in the chat about the tension between the vanilla and the chocolate being, if I got it right, the scale and the impact. I like that. So, and I see a lot of themes on chocolate and cocoa in this discussion here, which is nice. And Felicity, I know you like the chocolate, you said. Amath, I see every hand up. Please come on in, welcome.
Yeah, so thank you very much for your presentation. I was a bit late, but my name is Amath, so I'm the lead environment and climate for West and Central Africa. And I've been pushing also this brand, which we want to have in-house, which is a climate finance brand called Inclusive Green Finance. We were successful to have one first project in Niger with an agric bank, bringing highly concessional finance at 0% interest rate from the GCF. And now scaling it up in the region in 12 countries for a total amount which will be around $500 million. So my question is, as a assembler of finance, because here I'm talking more about assembler of finance, development finance, not focusing more on climate finance. So we are trying to scale up this approach, which goes beyond just bringing climate finance for a project, but we want also to change the way financial institutions operate in the countries to do good or sustainable development or whatever you can call it, or climate focus activities. So how can we also, in this type of work we are doing with public agricultural development banks and local banks that are connected to microfinance institutions, get also additional resources to work with those selected financial institutions with your organization, so at least we have much more resources in this new wave of projects that are coming in the 12 countries. Over.
Very simple. We need to talk. Let's talk. No, but I mean, seriously, it's not always that simple. You know, alignment, as I was saying, it's an alignment of expectations, alignment of returns. But in the first instance, I think that what you're designing sounds incredibly interesting. I love the fact that you call it inclusive. It is still often overlooked, the just element of sustainable development impacts. And I think that as gold standard, when we scale up, moving away from project by project, one of our big concerns is when you have big money driving big change, is that change actually delivering the right kind of transition? Is it a just transition? And we will be working and watching to make sure that. I'm delighted to hear you're calling it inclusive. How do banks and organizations that you're saying you've created this collective of organizations or financial institutions across Central Africa looking to access additional money? And I think the attraction of the additional money comes when you have attractive pipeline. So, the first thing they'll ask you is what's in your pipeline. And I think the other thing is that we need to, in our communities, NGOs, not be afraid of profit. Like, a profit is just a way, did you pass your exam or not? Is it a viable thing? If it doesn't make a profit over time, you're not going to have jobs, you're not going to have continued impact. So the other thing is that the balance, this tension between delivery on impact and internal rate of return, is a healthy one to constantly discuss and navigate. And so I think it's really about talking to people who are setting up funds. You've got people on this call. I really wish we had a platform. That's what I said in my slides. I think having a platform where an organization like you are organizing a kind of network where we are learning things. How do I share what I'm learning? How do I make the contacts to the people that we are raising money from, who maybe don't want to invest in us but might want to invest in you? Like, how do we buddy each other in a way which doesn't require 1,000 meetings and calls, where it's easy and slick? How do we do that better? And there's starting bits, but it's still a kind of messy jigsaw puzzle for me. I don't know how to bring these things together. There'll never be one shop, unfortunately, but we should have a few shops, right? I don't see any shop right now.
I know that we're doing. Dorothée, please.
Yeah, well, that's why I'm also trying to sort of keep a bit on the chat, and I see about sort of the smaller ticket sizes, and I think that's something we, as IUCN also in general, and taking a step into my ocean world, is where we are running a sort of smaller grants making facility that has also this aim to become, or help the projects become, bankable. And yes, in an ideal world, you would have this sort of deal closure blended finance ending to, or at least the new start of the implementation story. But I think we realized equally that there is still, on this broadly nature-based solution, food security, agriculture, this need for really pure project development. And I think specifically on the SCF side, yes, we do have money for feasibility studies, but it's really sort of looking at the projects that already have an idea, a business model. You might have a developer that doesn't know what NBS is, so can we help him, figure that out? There might be a legal question, etc. So it's very specific on projects that to some degree are already developed, but there is an extreme need to work with sort of a ground level approaches and support smaller entities, and again, with the idea to later bring them to higher scale. And what we've seen coming a bit through our coastal pipeline is actually quite exciting, but it is also clear that they still need quite a bit of ground support to address some of these issues, and might only be ready in a year or two to actually be presented to sort of a more commercial or even sort of a blended finance structure.
So we're getting close to the end of the session here, just a few minutes, and I want to highlight one comment from Bettina a bit back in the chat. Maybe we could use it for some kind of closing last thoughts from you guys in just a minute or so from each of you to wrap up. But Bettina was mentioning that around this tension is indeed the reason why we are so stubbornly trying to figure out the intersection between green, relatively easily to scale, and inclusive finance with this piece of the SAF and learning agenda. I think the two key pieces in what was presenting in the session are about the work with project developers and about the certification at portfolio level rather than project by project, although I'm not quite sure. But still, just point this out for her, Bettina, I think maybe a good point here, and last bit of discussion or comments you guys could make is the big question mark remains around the role of local intermediation as an entry point for inclusion. And so maybe you guys want to make each of you a minute or so on each of that, on that point to wrap it up. And then I'm sorry for those that we couldn't get to all the questions here, but maybe we can continue in the chat or offline. But I think it's been a very rich discussion. Maybe a minute from each of you would be great to wrap it up.
Yes, it's a great question. It's a combination of things. I think we definitely need strong intermediaries who value impact themselves, right? So what we see sometimes is that not only are we having to persuade the equity side, but you're also having to persuade the business, the SME themselves, to commit to delivering sustainable development impact. So let's just face it, it's not just the money that doesn't sometimes want to deliver on impact. It's sometimes the local institutions themselves are not really fully committed. So there's a capacity need there to understand, so intermediaries are needed to support a better understanding of longevity, because sustainability means you get money for longer. You might not get so much this year every year, but you'll have it for longer. And there's definitely a need to create greater awareness of the value of sustainable development still. I mean, we're talking to a converted audience, so this sounds totally banal, but I'm sure you know what I mean. The other thing I think is real stakeholder consultations are key, and that kind of level of engagement where intermediaries can play a very critical role in the design phase, in the go, no go phase, but that can only happen if there's real stakeholder consultation. And again, the value of certification ensures that though that is a real thing, it's not a tick box exercise, which sadly is often the case. I think evaluation and learning, the entities, the intermediaries who learn around these projects, how do we scale things up? You know, like you don't necessarily always need a fund manager from America to invest via Luxembourg in your activities. Maybe you have got enough money in your DFIs, and if there's an experience of how to do it through a blended finance vehicle, I think the local intermediaries could pick up, learn. Again, these shops that I'm looking for, where we can exchange this knowledge, would really be a useful, important player in scale. You know, pick it up, cut and paste it, and make your own money out of it. You know, that would be what I would end with.
Great, thank you, Felicity. Dorothée?
Yeah, maybe coming back to the point I said before under the TA and the capacity building effort, I think, you know, as we are developing the project pipeline, getting an idea where these projects are, to really identify and work on a more closer relationship with the subnational authorities, the relevant agents, including some of these intermediary or other entities interested in this project. So hopefully, again, we are at the start of a 7-year+ journey. So hopefully in a year or two, we have much more concrete ideas there on what works, what doesn't work. But obviously we are aware of it. And again, we're happy to report back in due course what we find.
Great. Well, thank you to both of you and to the audience here today. I think we really see the importance of partnerships in this. We see some of the tensions that we're having to work through here on these and aligning the interests of the different groups there. I really like, Felicity, you're coming about real stakeholder consultation, but you need to do it in a real way. It's not just kind of lip service, but actually doing and understanding, and intermediaries, as you mentioned, they can help play a role in that. But again, just want to thank the audience here, and it's time to move towards the break. We've got 10 minutes, and then we come back for the next session after this. Thanks a lot.
Thank you.